On today's Trend Report, we're going to look at how energy is impacting housing, healthcare, food, and transportation, the big four expenses that come out of every household.
Welcome to the Trending Report, brought to you by USA Financial. The Trending Report is a bi-weekly show that aims to focus on the trend lines rather than the headlines. Each episode features commentary around the state of the market, as well as other factors that may impact your personal finances. The host of the Trending Report is an investment advisor representative of and securities are offered through USA Financial Securities, member FINRA SIPC, a registered investment advisor. The Trending Report is educational and not intended as personal financial advice.
Hey, welcome back to the Trend Report, where we like to say trend lines, top headlines. And specifically today, we're going to look at how food and energy are correlated and what's happening with inflation. We're going to look at how Americans are spending their dollars and really how that spills into not only just the commodities market, but then is creating a tremendous amount of volatility here in the stock market. We'll also overlay, as we always like to do, a capitalization perspective and a sector perspective to identify the various caps from small cap to large cap and the various sectors, the 11 different sectors that make up the stock market, and how those are being scored out, if you will, where the strengths are, where the weaknesses are, and how that compares against the overall market, how it compares against cash or the short-term T-bill, and what that really means for us as investors. So we're taking our data as of last Friday, that would be October 7th, and we are jumping in to identify what does it look like from last week with all this volatility going on in the stock market. But first, let's start with the story ahead of the story, and that is, like we say, trend lines topping headlines, and most specifically, how are we as Americans spending our household budget money? Whether we were born before 1945 and are considered the silent generation, or whether we were born after 1997 and are considered the Gen Z generation, or we're somewhere in between, we're the boomers, or we're the Gen Xers, or we're the millennials. If you combine all of us together on these big four, so to speak, housing, healthcare, food, and transportation, on average, we're looking at about 72% of our household expenses are going out the door to cover housing, healthcare, food, and transportation. Now, energy affects all of these things, but most specifically, we're going to use the example of food and how energy affects food, just to give you a feel for what's going on today. So what we have is an interesting graph. It's got both energy and food overlaid onto the same graphic. On the energy side, we're looking at an 800% range. On the food side, we're looking at a 200% range. But again, they're overlapped on top of each other. So energy, as you can see here, is coming in with this orange line or orange bar. And then food is coming in over here on the black line or the black mountain, so to speak, that you see underneath this. So if we go back from 1970 through current times, actually here 2022's energy spike, if we go back in time to the 1970s, we see the oil shock here was shaking out, at least on these two items. This is pretty similar. You see the big spike up. You see the orange line driving up. You see the gray mountain bar coming up. The orange, again, is energy coming in at over a 600% increase. The darker black mountain, so to speak, is food coming in again at 150%, because we're coming across this way on food and we're coming across this way on energy, because again, we're overlaying these on the same graph to kind of bring them into perspective. But look at how they hung right together here in the 1970s. We saw them hang together again in the early 80s when we had some of that gas crisis going on. But then they did not correlate directly right here in the late 80s and early 90s. In the dot-com bubble, we see that food was actually dropping down, even though energy was spiking up. Here we got a big spike just coming into the financial crisis here on food, but we didn't really see it on energy. Energy was down here, but now we see what's taking place right now. It looks just like it did in terms of the corresponding ranges, almost like it did in the 1970s. We've got a 100% spike in food topping off, and we've got about a 400% spike in energy that's helping to drive some of that cost. And the reason I say it drives that cost is look at this stat right here. The price of oil influences as much as 64% of food price movements. And on top of that, it creates a lot of angst in the market. It creates a lot of volatility, both because of the stocks that are affected by this, but also the commodity market and just the overall general feel of how people and institutions are reacting to all of this. And we're getting this spike from a lot of different reasons. Now, if we look down here at the bottom, we know we've got supply disruptions. We had supply chain issues during the pandemic, and then Russia attacks Ukraine, and that affects a lot of the supply of energy because so much of Russian energy is supplied into Europe and elsewhere. And so it has a great impact on the overall market. Again, we're looking at rising energy demands as we start to head into winter, and we look at low capacity in terms of our reserves and our spare oil across the globe. So these three things are really driving this up even further. And again, it's creating a tremendous amount of volatility. So from that standpoint, now let's look at capitalization. Again, we're going to look at large cap down to small cap, how it's ranking out again from macro, meso, and micro viewpoints. And what that really is shaking out in terms of our scoring mechanisms. So here we're looking at capitalization trending. Again, we've got the macro to the left, the meso in the middle, and the micro on the right. Most specifically, what jumps out immediately right here is the top of the line, the top of the chart. We see that the cash equivalent of the 1 to 3 month T-bill is in the number one spot in all three time subsets, macro, meso, and micro. And furthermore, it is the only item that is scoring out positive across the board. The rest of the stock market from a capitalization perspective is scoring out in the red, is scoring out negative behind cash. So as they say, cash is king. This is the example of cash being king. Here's the overall stock market down here, this blue bar. You can see it did jump up a little bit at the meso level and then went right back down on both sides at the macro and the micro level. We see also down here at the bottom is international stock market coming in the last spot on the macro. It's coming in the last spot on the meso. It does jump up in the micro right here. It's got at least a current or potentially temporary jump up taking place here, going from bottom of the heap up towards just above the middle of the heap. Bonds, they're hanging here as a perspective, drop down a little bit the meso, but then come right back up. So the bonds went the opposite of the overall stock market. So here's our line for bonds. And then the stock market overall starts here, jumps up, and then comes back down. Now, the other thing that stands out here is it's mid caps that are, you can't really say they're winning the day because they're still coming in as a negative. They're still coming in below cash, but they are the notch below cash, So here's the mid caps coming in right here, as you can see. And most specifically, we've got growth, mid cap growth leading the charge. Again, meso, mid cap growth leading the charge, and micro, mid cap growth leading the charge. In each instance, we've got the index itself falling in line right behind that, and then value bringing up the rear in terms of those mid caps. And then we are seeing some jostling for position down at the bottom. So here's the S&P 500. Again, here's the S&P 500, and then here's the S&P 500. So when we're looking here, we see some small caps down here below the S&P, but then the small caps are up above the S&P in the other two categories. So overall, cash is king. Cash is outpacing the rest of the market. Everything is scoring negative. The one thing that's scoring beneath cash, the closest to cash, would be mid-cap growth at this point in time. Now let's take a look from a sector viewpoint. So again, here we are with sector. Once more, we're looking at macro, meso, and micro. And here we are in the number 2 spot, number 1 spot, and number 2 spot. There's our cash again, right hovering up at the top. The only thing that we really see happening different in the sector subset is we do have energy scoring as a positive number along with cash. It's the only subset of the market from sector or from capitalization that is scoring positive. And it's energy coming in the number 1 spot in macro, the number 2 spot on meso, and the number 1 spot again on micro. Everything else is still coming in negative, just like we saw on capitalization. So even within the subsets, the only golden child, so to speak, has been energy. Again, the overall stock market is right about in the middle where it should normally be. Coming across the stage. And then we've got international down here towards the bottom, and then it took a little jump up in the micro. I will also point out very quickly as just a subset that there are, or a sub-conversation, that there are things moving all the time beneath the water, so to speak. It's like, here's the surface, and then we have all kinds of currents taking place beneath it. So healthcare is holding up here fairly high, still coming in negative, I should point out, but it is holding up here fairly high as we move across. But then look what happened with utilities. Utilities is here on the macro, then it drops down to the middle of the heap on meso, and then it's all the way down here to the bottom on micro. Real estate has pushed its way to the bottom. REIT stands for Real Estate Investment Trust. Real estate has pushed its way to the bottom in all 3 time frame categories: micro, meso, and macro. So volatility is impacting the market tremendously. We're seeing great swings on a daily basis. We're also knowing that the commodities and the volatility and the angst that's in the market is affecting us, whether we're looking at sectors or whether we're looking at capitalization. So it's a pretty wild time right now. We'll keep track of this. We will come back and share with you how these things change in another couple of weeks. I hope this, however, helps you get just kind of a good frame of reference of what's going on in the markets. Thank you.
Thanks again for listening to this episode of The Trending Report, powered by USA Financial. We invite you to visit usafinancial.com to find out more about our work with independent advisors and their clients all around the country. Any projections, targets, or estimates in this report are forward-looking statements and are based on the firm's research, analysis, and assumptions. Due to the rapidly changing market conditions and the complexity of investment decisions, supplemental information and other sources may be required to make informed investment decisions. All expressions of opinions are subject to change without notice. Clients should seek financial advice regarding the appropriateness of investing in any security or investment strategy discussed.